Today, I'm going to explain the Dow Jones Industrial Average and how a price-weighted market index like the Dow Jones is calculated. Most of us see this stat in the daily news cycles, but very few of us actually know what it is and how that figure is used by investors every day. Before you can understand the Dow Jones, you first need to understand what a stock index is. A stock index is a selection of stocks within the broader stock market that the overall performance of is tracked and given a summary figure, which is used to help investors judge the overall performance of the stock market at a glance, the Dow Jones being arguably the most commonly used and referred to stock market index. You might have also heard about the S&P 500 and the Nasdaq, which are similar, although they include a different selection of stocks and are calculated significantly differently. Knowing that, now let's take a closer look at the Dow Jones more specifically. The Dow Jones is made of 30 of the most highly traded stocks on the New York Stock Exchange and across a broad range of sectors, from industrials to health and technology. When investors see the movements up or down on this index, they are given a general trajectory of the overall market and can generally see whether the market is performing well or poorly. It's also important to note that the Dow Jones is price-weighted and not market cap-weighted, like many other indices. Now, a price-weighted index, like the Dow Jones, is calculated in an interesting way, but I'm going to explain it using this simplified example. Let's say we have an index of 3 companies, company A, B, and C. Company A is worth $10 a share, and company B, $15 a share, company C, $20 a share. Now, 10 plus 15 plus 20 equals 45. If we were to divide this by 3, as there are 3 companies, this would equal the price-weighted index value being 15 in this case. Now let's say this particular index wants to add a 4th company, and this company is worth $100 per share. Now this widely skews our index all the way up from 15 to 36.25, or 142%. Although this doesn't reflect the market conditions at all, and would be misleading if not adjusted, as it's only impacting our index because we've simply added a stock to the list. So what we'll do is take the latest skewed figure and divide it by the last reliable index value, in this case, 15. 36.25 divided by 15 equals 2.1466, and that becomes what we call our index divisor. If we now divide 36.25 by a divisor of 2.4166, we will get 15 once again. This is what we want, as it ensures only an increase in the value of the stocks on the index leads to an increase or decrease in the overall index value, giving investors an idea of overall market performance. In this case, the stock's value didn't increase, rather one was just added. Of course, the Dow Jones Industrial Average is made up of 30 stocks at greater value, and therefore is far greater than 15. However, this is a simple example of how the Dow and other price-weighted indices are calculated. Also worth noting that many investors believe that market-weighted indexes like the S&P 500 are superior gauges of overall market performance, where the degree of influence a stock has on the indices is based on the company's market capital rather than the stock price. Naturally, a price-weighted indices will mean that higher percentage moves in higher-priced stocks will have a greater impact on the overall move on the Dow, meaning the swings up or down might be exaggerated in cases where higher-priced stocks have made major swings. However, more on this in another video. Before we finish, some interesting facts about the Dow Jones. It's one of the oldest indices in the market, and was developed by Charles Henry Dow and Edward Jones in 1896 in order to provide investors with an overview of the overall performance of the economy. Their company was called Dow Jones and Company and provided a financial news service founded in 1882. On March 15, 1933, the largest one-day percentage gain in the index occurred during the 1930s bear market of more than 15%. The Dow closed at 62 on that day. And on the 4th of January 2022, the Dow was at 36,799. It's also worth noting that it's possible to invest in the Dow Jones itself rather than individual stocks through an ETF or an exchange-traded fund. More on this in a later video. Also, guys, the plural of index is indices. Don't sound like an idiot when discussing the stock market.